IDFC First Bank uncovers an employee fraud to the tune of around 590 crore rupees, constituting of 25% of its estimated profit for FY26. The stock slumps nearly 20%, even as the management says that the issue is localized and the bank will be comfortable to absorb the hit. Shares of AU Small Finance Bank slump as Haryana government seeks information on suspected unauthorized transactions in accounts. The company maintains that there is no indication of fraudulent activity yet, but continues an internal review. AU Small Finance Bank as well has been deep impaneled by the Haryana government.
UPL will consolidate its global and Indian crop protection businesses into a single entity which will be listed on the exchanges. The stock slumps even as the management tells CNBC-TV18 that this restructuring will unlock value for shareholders.
And Axis Bank clarifies on rumours of it looking to pick up stake in Credit Axis Grameen, says it has neither submitted nor plans to submit any such offer. The stock is one of the top gainers on the Nifty. Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And the markets are green today. A couple of one-off incidents in the broader markets is causing the mid-cap index to trade in the red. But otherwise, pretty good-looking screen with the Nifty at around 25,700 odd. Hey, Mangalam.
Hi, Nigel. It's a good-looking screen. The question is whether we go past the initial resistance of that 25,750 to 25,800 mark or not, and whether that happens towards the second half of trade and where the market goes from there itself. All of that will be the key monitorables along with what takes place in the AI world as well. And we have, the uncertainty around tariffs. So let's see where that goes. Speaking about AI, the L&T and Nvidia have entered into a partnership to build a gigawatt-scale AI factory. Seema Ambastha, who's the CEO at L&T Vyoma, joins us now to discuss this venture. Thanks a lot, Seema, for joining in. Congratulations. And if you could give us a sense on, a little more on what is the kind of partnership that you've announced, what is the investment that this will entail, and in terms of production timelines and revenue that would be recognized, what would it be?
So the partnership, you're aware, as per the press release.
Yes.
So it's a gigawatt. We are building capacity for the country. We are building capacity for India and for the globe. So that's what it's all about right now. It's too early to talk about other things, but I can in general give you more information on how this whole thing is going to shape as far as the India capacity is concerned, which is currently pretty low. And the idea is definitely there's a lot of strategic leverage from a compute standpoint.
Yes.
So it makes sense to build some real good capacity for the country.
Okay, all right. Hi, ma'am. Good morning. Good to see you in. This is Nigel on this side. From an India standpoint first, how do you see our data center capacity move up? Point number one. Point number two is, what proportion of that would you like to be a part of? Currently, what is the game plan? Say in the next 5 years, where do you see your role in this data center capacity building here in India?
So that's a good question. So currently we are at 1.3. Expect this to be 10x. So nothing less than 10 gigawatt in the next few years, next 4-5 years. So that's a very, very critical, crucial, tremendous amount of investment. And for L&T Vyoma, it means a lot. Actually, we are looking at least 10% market share immediately. So you can imagine 10 to 10% market share is pretty big. That's how the gigawatt factory announcement also is relevant. So the immediate would be about 250 megawatt to roll out, specifically on the AI and ultra high density data center space. So this is the plan, and this is across the cities, across markets within India, which is Chennai, Hyderabad, Bangalore, Bombay, and these are the major markets.
What is the kind of investment that you will have to make on this?
Yeah. It's interesting. So see, the investments are to the tune of 7 to 10 million per megawatt. So you can actually make an intelligent guess what it means to invest and what would it mean, in terms of revenues, right?
What are the typical asset turnover ratios of these factories?
Asset turnover per se is like, so 7 million is what I expect it to be, like per megawatt of data center capacity. So it'll be like multiples of that for the infrastructure. So it'll be at least like a 10 times multiple for infrastructure.
All right. And what is the timeline for, you putting those capacities on stream? And by when does this get recognized in your reported numbers as revenue?
So let me tell you, the first 28 megawatt of capacity is already live, and the infrastructure for that will go live as soon as we can, get the rest of the contract in place, right? So we are targeting something like end of this year to have the B300 go live about 12,000 to 14,000, which by December, so that we can recognize at least 4 months for this year.
Seema, if I got that number correct, 250 megawatt is the initial rollout, right? And going by the capex that you're giving us, that should entail around $2 billion approximately, 16,000 crores, very, very roughly.
So a couple of things, right? The first 28 megawatt will go live in this year, and subsequently the rest of the 250 will go live, because those, you still need the data centers to be ready.
Right. So then the peak capex for this 250 will be around 16,000 crores.
Yes, it will be. You're right. Your calculation is more than right. Yeah.
Got it. All right. No, you told us to do the math, so we said let's oblige. All right. Seema, let's get to a couple of other aspects then. There's another listed company, E2E Networks. If I'm not mistaken, L&T has close to around 19% in that company. What role that one needs to play in this entire scheme of things? And is there a plan to go ahead and acquire an additional stake in the company?
So additional stake in the company is the board's decision, but let me tell you, what does it have? They have a strategic role to play, right? Two things. They continue to sell the capacity that they already have in the Chennai data center of L&T, so that they do it. That's about 3,000 GPU capacity, which is already available. And post that, we have an MOU. We have already signed an MOU between the two of us. So they will also take some capacity from us, what we are, the B300 that we'll bring online. So that's another thing. So whatever capacity they need, they will start leasing from us.
All right. This is one agreement that you've signed.
Really quick time to value for market.
Understand that, Seema. Just a final question. This is one partnership that you've tied up with Nvidia. Is this exclusive? Are there any other more similar agreements underway which you could do with some other players as well?
So that's a good question. As of now, we have looked at Nvidia, but yes, anything else relevant like the other players, which is for inference or any other, we will explore it. It depends on what the market needs, right? We are building a complete sovereign AI capacity for the country. So we'll continue to respond to the market. One of the most important things now is to look at building capacity for the training workload, and then of course for the inference workload. So we will first leverage whatever is in demand, and then explore the others.
Okay, all right, Ms. Seema, we appreciate you joining in. Wishing you and the team all the very best. It's going to be a big role to play. Y'all have a big role to play in this data center capacity, and India is on its way to, increase capacity by 10 times. So it's going to be rather interesting times. Thanks a lot for joining in. We'll keep touching base. We keep re-inviting you on the show, and you give us a sense in terms of the progress that y'all are making. For the time being, let's shift focus to our special segment. We get a few ideas for profit, right, every day from Money Control Pro. So let's go across to Anubhav Sahu, who's joining in to talk about a stock that he's tracking closely. Anubhav?
So we are talking about Galaxy Surfactants, which is the leading oleochemical company. Now in last few quarters, stock has been impacted by a number of headwinds like US tariffs, slowdown in urban consumption, and high cost of key raw material, that is fatty alcohol. Now few of these challenges are getting rectified. Firstly, trade settlement of India and the US, followed by the US Supreme Court pronouncement on tariffs, helped Galaxy re-access the US market competitively. Now, this positions Galaxy well to scale back its US business. Secondly, urban consumption appears to be holding up post GST rate cuts and other fiscal and monetary measures. Companies also getting ready for the reformulation demand by some customers for their value portfolio. Now, reformulation refers to clients' preference for surfactants based out of crude oil derivative feedstock, which are enjoying significant price differential versus the fatty alcohol route. Now, in this regard, companies are waiting approval from the key client, which can help it regain market share. That said, company continues to face competitive intensity in the Egypt business, which makes them look for alternate markets like that of Africa. However, valuation is enticing with the free cash flow yield of 5%, given long-standing relation with the MNC customers and strong balance sheet. A stock provides interesting opportunity to accumulate, in our opinion.
All right, that is Galaxy Surfactants. We had the management join us last week as well. The stock did well post the management commentary. We'll take a short break, come back on the other side. Vidya Shankar Krishnan, who is the leader at M&M Forgings, joins in to discuss the company's future growth outlook. Welcome back. You're watching us here on Chartbusters. Let's get chatting with the management of M&M Forgings. Vidya Shankar Krishnan, who's the chairman and MD, joins us now on the show. Remember, we will focus on the volatility in US tariffs, their domestic business, what they plan to do with Europe, and the kind of capacity utilization that the company would be doing going forward. Thanks a lot for joining in. It's been a long time since we spoke, so a lot to catch up on and perhaps a lot to extract out of you for the future as well. Always a pleasure speaking with you. Let's start with the current capacity that you have, the current capacity utilization. What kind of volumes do you intend to do in FY26 and FY27?
First of all, thank you for having me on your show, and hi to you, Mangalam, and Nigel as well. Yeah, so we are looking at about 76,000 tons of capacity in this year, which is almost the same as what we did last year, maybe a couple of thousand tons extra relative to the previous year.
So that's the volume. 76,000 tons is the volume that you're doing. This against your capacity of over 130,000, if I remember correctly.
On a capacity of 120,000 tons as we speak, which would go up to about 150,000 tons by end of H1 of next year. Okay. So against this means H1 of FY27, which is about 9 months from now. So we are expecting our capacity utilization to easily get into the 6 digits, next year, and that's what we're targeting. But we're very sure that we'll cross 85 to 90,000 tons.
Okay, all right. Hi, Mr. Vidya Shankar. Good to see you in. It's been a long while since we chatted, sir. I just want to caution you with regard to this guidance because you run a very good business, but sometimes you're a little too optimistic. But we're going to hold you this number, 85 to 90,000 tons for the next year, with the probability of going to around the 6-figure mark, which is 1 lakh tons. We'll keep an eye out on that. Few basic questions. First, with regard to the exports, what proportion of your exports go to the United States? And post this tweaking of tariffs, what tariff are you going to pay, as of now?
Okay. We are currently exporting about 9% to the US. Okay. And our run rate prior to this was about 16%, 17% last year. So exports to the US have almost come down by half, almost. Right. So we're at about 60% levels compared to the previous year. The main reason for that has been inventory at customer end and their markets tanking, and therefore they have cut down their offtake from us. They've started coming in from November, December onwards, albeit at lower levels, and we expect them to come in full from March 2026 and onwards. Got it. So we expect a resumption of the US market.
All right, that happens next year.
What about, sir, the tariffs, sir? What are you paying right now? There's been plenty of tweaks here and there, one section or the other, what is exempt, what is not. So for your 9% that you're exporting, what kind of tariffs are you paying? And is there any change post what we heard over the weekend?
Yeah. First, we aren't paying any tariffs. Our customers are bearing the tariffs.
Right. What is that, sir? How much are they paying?
I'm coming to that. All our contracts are presently FOB or CIF. So customers are bearing the tariff. First. Second, we understand that they were paying close to 50%. And the 50% is on top of about 2.7% of tariff that existed prior to all this tariff additions. Now, the 50% tariff got revised to somewhere between 18 and 25% based on the India-US deal. Now, we still do not know where we stand as far as that deal is concerned. But however, we do know that we come under Section 232. Under 232, the tax, the duty on export of forgings from India is expected to be 25%. Now, we do not have a clue on how much the trade deal would affect 232 or not. That is something that the fine print will come. And still now, we and our customers are keeping our fingers crossed. So I would say that we would swerve to around 25% plus the earlier 2.7%, or it could be as favorable as 18 plus 2.7%, or something in that range, subject to final print.
All right. This is a conversation that merits a longer discussion, but that we'll keep aside for now, because when you say the customers pay that 50%, typically you may have to also reduce your prices to some extent to make it comfortable for them to pay that 50% as well. And now that's coming down to 25%. You will have probably the wherewithal to increase your prices a little bit as well. All these factors are fairly nuanced, but what can you tell us about your margins? And secondly, the Europe business as well. Europe, if I remember correctly, almost accounted to 15-16% of your sales as well. Now with the India-EU FTA being signed, will that see a jump too?
Yes, we are seeing strong offtake from Europe. Plus, with the addition of our 16,000 ton press, we are in discussions with customers to add bigger parts over there. So Europe business looks stable for now with an upward bias. US very clearly starts off with an upward bias because of the resumption of business from customers there, owing to their demand appearing in their radar. And not just small, they expect 2026 and at least up to Q3 of 27 to be very strong years for the Class 8 markets.
Okay.
So both our considerable export markets look pretty strong as we speak.
Got it, sir. Machine forgings as a percentage of a mix is how much?
Right now is about 51%. Has slid slightly. So that's basically product mix, and also offtake from the US dropped. So it's a mixed bag. Has dropped about 51%. We are looking at that going up over time. And next year, we don't have our projections yet on what we are targeting. But I would say it should go back to the previous year of 54% and start to move up to a targeted level of 65%.
Got it.
Presently, most orders that come in are machined. Very few orders are for raw forgings.
Got it, sir. Very simple question before we let you go. This year is going to be flat in comparison to last year, but you're sounding optimistic about FY27. You can take a pause and then answer me. For the coming year, can you look at revenue, say, closer to 2,000 crores? And what should the margin band look like, sir?
The pause is like, kaun banega crorepati, is it?
Sir, crorepati to your shareholders will become, sir, if you perform. You're running a good business, as we know, good pedigree of promoter, but numbers are not coming by. So leave us with those two numbers.
Sure. I'll take a little bit of time to answer your question. See, we reached 1,500 crores levels about 2 years back. 1 year, I could say, was a pause year. That usually happens. But this year, I mean, FY25 was also a dull year. FY26, we should have definitely seen much better. Few factors went against us. One was some customer programs which are large, got postponed by more than a year. And a couple of programs that we were launching also got postponed by about 7 to 8 months due to internal reasons. So the good thing is that all these programs are live more than anything else. So all these are coming. We have invested close to 1,000 crores in the last 5-6 years. All that is coming good now. And therefore, we are pretty strong. And we would, on our outlook, we are expecting at least something in the region of 1,800 plus for the coming year. And definitely, I've taken a bit of input from you, Nigel, from the previous cycle. So we are very cautious about this number and very certain.
1,800 crores with margins around the 17-18%. Fair?
Margins would be upward biased. I would say 17-18% should be a reasonable.
Appreciate you joining in, sir. Wishing you all the best.
I have a couple of other points to make. Nigel, 1 minute.
Yes.
Nigel?
Go ahead.
Yeah. See, against, we have seen some upticks in power and labor costs, and we are working hard to claw back on both. On the power side and on our interest costs, we made some headway, and we are expected to save something in the region of around 40-45 crores in the coming year, at least, with regard to power and interest. So those are likely to be appearing in the full year from April onwards.
Beautiful.
That would be pretty positive for the organization in FY27 and beyond.
Taking that point, sir, on board, and that's why you're sounding optimistic about FY27. All the best for the remainder of this year, and hopefully the tariff situation plays in your company's favor as well.
Thank you, Nigel.
Well, time to slip into a short break. Come back, continue to focus on markets. Don't go anywhere.
Welcome back. The Nifty is holding up with a 100-point gain, but we're still off the highs, and that's courtesy the tech indices. The tech stocks, all of them lower at the low point of trade, as our ticker team is telling you as well. But we'll wrap up on this edition of Chartbusters with a promise to carry the market action forward on trading hour. Stay tuned. The mid-cap index lower. We have the advanced decline as well. Now the lines have kissed each other at 1,400 odd, and Nifty as well, while sitting with a gain of 100 points, is off the highs.